social, political, and economic issues are so great on the negative side that will overcome any individual enthusiasm to somehow create a thought that things are better than they really are. And more of that will come paramount on the political side of things. And that's why I say if we're fortunate enough to continue having a rally, if one finds themselves overweighted in general equities, this would be a good reason to lighten that load as far as I'm concerned.
Peter Grandich returns. He is the founder of Peter Grandich Co. and will be discussing the markets and his outlook for not just the economy, but what investors can expect in terms of risks. Welcome back to the show, Peter. Always good to have you.
Always a pleasure to be with you, David.
Let's start with the overview of your markets first. Last time we spoke about 2 months ago, you weren't feeling great about the outlook on the economy, about your outlook on stocks.
It always takes a few months after it's actually taken hold before it really starts to show. But I really think before the end of the year, it'll be obvious to everybody that we were in a recession.
Now, arguably, some economic indicators have deteriorated, and we'll talk about that. But let's revisit that outlook. Are you still bearish on the markets overall?
A few weeks ago, I spoke about looking and hoping for a 10 to 20% rally in the market, not for me to prosper in, but for people that were overly leveraged, just realized that 6 or 12 months ago, that there was going to be this window thanks to the expectation that the Fed was at least going to pause, if not stop raising rates. And therefore, what I like to coin, the don't worry, be happy crowd on Wall Street would use that as it's all green light to go back to the way things were and happy days were here again. However, I stressed and continue to do that such a rally would be something to lighten up into, not to get reinvested in. So for all practical purposes, for a slight period of time, I became Switzerland. I wasn't neither a bear or a bull, but I do think after a period that could last several weeks, I think serious issues are going to start to reemerge. The slowing of an economy, the political environment, both here and abroad. It's a potential geopolitical hotspots. Still, of course, Ukraine, but I think the far more important one now is Taiwan. These and other political issues in the U.S., scandals potentially on both sides of the aisle, I think are going to become more paramount and more influential on what markets do and don't do.
So yeah, just on the issue of Taiwan, we'll get back to the American economy. So I'm just reading an article from Forbes out this morning. Secretary of State Antony Blinken reiterated the U.S. position on its one China policy as he met with China's leader Xi Jinping Monday, saying it does not support Taiwanese independence and that containing China's economy was not an American goal. He was speaking to the press at the U.S. Embassy in Beijing.
So it does fly in the face of what the president had just said recently. It seems to be backtracking, but that's not unusual. We seem to backtrack from a lot of things he first says. But there is still a very strong aisle, even within the Democratic Party, not just from the Republican side, who would probably say this is an appeasement, but it's going in the wrong direction. That this type of attitude of backing down and not standing up to China in different ways has only caused the issues that we now face, and this will only make it worse. I think that'll be the one side of the argument. There's no question also, I think it's important while you're talking about China and not Taiwan for a moment, is China's economy itself is on the fence. And there's two camps, both of which I think can end up being right. That's why I'm on the fence with them. There clearly is a change in the economy. The ability to grow in the way that it used to is gone. But some still feel that there's going to be a fairly decent rebound, and others think that they have some serious issues afoot that are only getting started now. So what I would say is, if you could tell me how China's economy goes over the next 6 to 12 months, I think it'll have a major impact on how the world economy as a group goes.
Well, actually, since you brought it up, the Chinese economy contracted last quarter, slower than expected. And in fact, there's talks of the Chinese central bank potentially stimulating the economy again.
Yeah, so they have room in that because their inflation rate is low, but they have some serious issues in the real estate market as well. And I don't think anywhere as bad as ours, quite frankly. But so China has also at the same time made leaps and bounds as a world potential leader in what it's been able to do in the last year. It's gone into the Middle East, where the United States was always the dominant and almost sole world leader, and has brought sides together like Saudis and Iran, who were mortal enemies. They have clearly gotten Saudi Arabia to move more away from the United States than move closer to it. And they've also are leading the role in the BRIC nations growing and the de-dollarization of the dollar. And so they have more playable cards, in my view, than the United States has right now. And I think anybody that makes serious long term decisions and doesn't take into account geopolitics and China in particular will be making a mistake.
Uh, on the flip side, we had Henry Kissinger speaking to Bloomberg over the weekend. In an interview with a Bloomberg editor, he said that on the current trajectory of relations, I think some military conflict is probable. And he said that I also think that the current trajectory of relations must be altered. What needs to be altered, Peter?
Well, again, that goes back to how you look at it. There's people here that believe that China has taken just full advantage of us in so many different ways and put us in a fairly dire position, and that has to stop. That's one camp. There's another softer camp thinks that somehow we have to recognize we are not who we once were, and they are maybe the next big kid on the block, and that we need to make more peaceful movements towards the inevitable change in that. And somewheres in the middle is where it's likely going to end up, but that's still an argument that needs to play out. And this current mood today could change tomorrow. And so I would just say for now, the viewpoint will be is that once again, Biden has backtracked from some things he's personally stated about how he viewed things. And will also the hard camp against China will say that this is not maybe not appeasement, but it's certainly not conducive to what we need done for ourselves against what China does to us.
Bring it back closer to home. What do you think are some of the biggest political issues that America needs to overcome right now in order for investors to not be worried about political issues at all?
Well, I don't think they worry to the point what they should be. I mean, never, I don't believe, other than perhaps our Civil War, has America been more divided in several issues. The Republicans and Democrats, you might as well watch the wrestling. It seems like the same thing watching them, but it's in real life. It's not put on, at least put on in some instances. And the ability to get concrete efforts done to take care of enormous issues from our debt crisis to the coming retirement crisis to the infrastructure issues we have and so many other factors while we just continue to pile on printing money we don't have or ability to pay back and really have broken the back. And David, I deal with a lot of small business owners around the United States, and they've to a T all say that it's never been harder to run a business for a lot of reasons, a lot of it coming from out of Washington, and that it's coming to the point where they just want to jump in the wagon and have somebody pull them as they feel that they're now pulling so many other people who shouldn't be in the wagon. So the political stuff, and we haven't even discussed the potential. We already know that a past president who's trying to run has been indicted, and some believe that is targeting just political to get rid of an opponent. And then we have the other side where claims are being made by, and who knows if that gets legs and turns into some really solid stuff that people can't deny and all sides would have to agree to. So I do think that one thing is certain. Politics will play more of a role on the various markets you're going to be talking about in the coming weeks and months as we get more into this year and the 2024 campaign really starts to take hold. So I think it's important people start to have an understanding on how politics could impact their investments. It's not something both a lot in the financial community and a lot of individual investors spend time on, but I think they'd be well served to start doing that now because it's going to play an important role.
Well, it certainly has a direct impact on fiscal policy. I'm just curious because I've never myself lived in the U.S. You said that over the course of your life, you noticed that this divide between the left and the right have gotten wider. Why do you think that is? Is it a cultural issue? Is it the media propagating different views? What's happened here?
Well, you named two of them right there. There's clearly a dramatic cultural shift. Uh, Part of that comes from what was once a more so-called religious country that's moved towards secularism. We've also have a battle of the ages. There is certainly going to be more pressure on a 35-year-old 10 years from now on them to fulfill and help serve the country by taxes than it was for me. Because as this debt keeps increasing, the working person is going to be called on more and more to somehow pay for it. And there's going to come a point when that younger person is going to look at and go, wait a minute, a lot of this expenses is going to something like Medicare for an 85 or 90-year-old person to have a lung transplant. And I'm 35 and I can barely make ends meet. This is a coming battle. It may not impact the markets today or be discussed today, but in your generation, it's going to come to the forefront. And it's, we're even seeing it in your country, Canada, where Canada has implemented and encouraged certain seniors who are both either financially or ill quite bad to consider, taking their lives. And it's a Canadians are shocked when they hear it, and then when they finally Google and search it, they see that it's actually happening. And some of them are very upset about that. Others consider it just part of a new culture and the way life is becoming, and that's how societies move. And it's difficult for those who believe against something like that to see that keep moving in that direction.
So you've talked about the retirement crisis before. Are you saying that, and please correct me if I'm not getting this right, but are you saying that as the population in the U.S. and perhaps some other Western countries get older, the younger generation will likely have to face higher taxes down the line in order to finance more Social Security, more Medicare, more retirement homes?
And just the cost of keep increasing debt. Look in Japan, it's estimated that within 20 years, there'll only be one working person for every person retired. That's unsustainable. We went from 20 people working to support one person on Social Security now to less than two people working. And so that's just one of the demographic arguments that are going to happen here. There's also going to be an issue with people's ability to retirement for just retired. When you have almost 2/3 of the working force working paycheck to paycheck, they're in no position to save and save well enough to meet what would be needed in retirement. So that in itself is going to be an issue. And then there's other issues with that, affordable housing, supporting that, a great amount of immigration, whether you want to call it legal or whatever the terminology some side may be using. All these things just add up to more and more expenses. And with less people ability to pay it is going to make things really challenging. And eventually, governments, remember, all they can ever do is they don't create a business that they make a lot of money on. They create taxes and other fees to try to sustain and pay for things that, they vote into, power. And that's becoming more and more difficult for them. And some of them started to realize it. For the first time, David, I never thought in my lifetime we would hear politicians openly speaking about you need to do something about Social Security and cut it. And then when the so-called hit the fan, they all backed off, but they opened the door to that. And that's going to be a necessary evil to focus on. And it's not just an issue restricted just to the United States. It's an issue many parts of the Western world is facing because of an aging population and less younger people working. It's one of the secrets, I think, behind governments believing immigration will help because it'll bring more workers in, but it's not something that they're openly going to declare that's the reason for.
Which financial sectors, if any at all, will likely benefit, or corporate sectors will perhaps benefit financially from an aging population? I'm not talking about the obvious, like retirement home builders, but
Well, believe it or not, that's one of it. Listen, the days of building 5,000 and 6,000 and 7,000 square foot homes is over. Even if younger people can afford to buy a home, it's not going to be one of those big ones. So we're seeing changes in way people's communities are built. We're seeing far more smaller homes being built, even not just on the retirement age. Then, of course, there's the medical. There's also, people might get older, but I live in the community, but they still want entertainment and they want to have joy. And so the service industry and certain types of service industries are going to benefit from that and all. And the taking care of. Listen, one of the big things that changed, David, is in previous generations, 2 or 3 generations lived all in the same household. Either your great uncle, your grandparents were there when you were a young kid and so forth. There wasn't assisted living and all these other places, but part of the fact that we were able to extend life and make the into the 70s and 80s and 90s, some diseases that weren't paramount because people weren't living that long are now impacting people and the cost to take care of that. Dementia and all the other areas now, and the cost to, if you're not able to take care of them and place them in a facility, is prohibitive for 8 or 9 out of 10 of Americans. It's probably the same around the world as well. And that's also another thing that's going to become a more and more issue. And what public will always do will turn to the government and say, hey, you got to help us with that. At a time when the government is here in at least the United States is very strapped. It really is it's technically bankrupt, because if we ever carried our liabilities on our books, we would be considered bankrupt. I know you've spoken recently about bankruptcies in businesses, how they're increasing. So things are things are not very bright if you look past the next 6 to 12 months. There's so many paramount issues that have not yet been addressed, and they're growing worse as each day goes by. Whether or not we talk about it is inconsequential.
What's another issue we haven't discussed yet? We talked about the aging population, geopolitics with China. What's another issue we have to be aware of?
Well, housing. We
Okay.
have a huge problem of affordable housing now, and if you think about this, uh, New Jersey, where I am, has some wealthy towns, and those people want to have people come and cut their lawns and clean their houses and do other what we call menial work, but they certainly can't live in those towns. So, but they need to live at least close enough to make the commute workable, and they need affordable housing. And one of the things here in New Jersey and some other states is affordable housing, even for people for renting, has become just astronomical. It's become unaffordable. And so that is going to be a big issue. And then the issue that a lot of people aren't talking about, only because my wife and I are involved in it, is more and more people are falling on the needs of food banks. It's an amazing phenomenon. If you talk to really any food bank anywhere in the United States, they will share about how many more people are coming and the level of people from income that need now to come to them just to sustain life. In fact, one of the big unknowns that a lot of people aren't talking about is how many people now are using credit cards just to pay for day-to-day life needs. Something that in our generation we never thought of. I mean, my parents never even had a credit card.
You know what? Another stat I've noticed. First of all, the level of credit card debt has reached an all-time high. It's expected to surpass $1 trillion soon. And on top of that, the delinquency rates on credit cards in the U.S., that's been rising at the fastest pace since 2008. This is data from the St. Louis Fed. It's currently at around, it's hovering at just under 3%. Back in 2008, it was near 7%, so still nowhere close. But the point is, Peter, it's been rising dramatically over the last 12 months or so. Do you think this trend is likely to continue?
Yes, the people that I continuously hear from all parts of the country are more and more struggling than ever before. There's a certain level that's doing well. There's no question. You want to call them elite or whatever. But more and more average Americans are finding it more and more difficult to not only move forward, but even to hold their own. And there'll be some relief because the rates hopefully are peaking. I'm not in the camp that think rates are going to go substantially higher from here. And that in itself will be used as a so-called selling point to be reinvested again. But I think the social, political, and economic issues are so great on the negative side that will overcome any individual enthusiasm to somehow create a thought that things are better than they really are. And more of that will come paramount on the political side of things. And that's why I say, if we're fortunate enough to continue having a rally, if one finds themselves overweighted in general equities, this would be a good reason to lighten that load as far as I'm concerned.
there's a lot of concern from people regarding commercial real estate, but where I'm seeing more of a debate is residential real estate. Some people are saying that because, let's say, the lumber price has gone down, that's a leading indicator for where houses are going to go. Other people are saying no, there's still very strong demand for residential housing, and so that market's not going anywhere. Just based on the data and your personal observations, how's the housing market doing? And let's just take New Jersey where you're in, because I know the housing market's very varied across the U.S.
Well, again, you brought up some very good points, David. I would say the more bigger issue this time will be in the commercial end of it. Part of that is because of what COVID caused and the change to big office buildings in big cities, plus lawlessness. The combination of that has made it very difficult for some people to justify keep going into big cities, especially when they have the ability to still work from home. And of course, they're concerned about their safety. And so, with so much commercial real estate loans due in the next 12 to 24 months, and how most of those loans, a good part of them, are held by regional banks, and regional banks have been put under more pressure and have gotten more tighter, certainly from the clients we hear that are in business over these last couple months since everything happened a few months ago. I would say that the commercial real estate is more of a risky business. When a company like BlackRock and has one of the more well-known real estate investments trusts can't pay the dividend because of certain things that are happening, I think that's the canary in the coal mine. And I suspect, and I forewarned people that the next trouble was going to be in the REIT markets, where a lot of people ran to just get dividend yields because they couldn't find it in normal fixed income. And now some of those real estate investments trusts may have difficulty sustaining the dividend, if not having to cut it or remit it. So to answer your long-winded question, I think commercial real estate has more pressure on it at this point than residential. And one of the other reasons is we didn't get crazy on the building side in the last cycle. We used to get where they just built so many homes on specs. Builders finally got smart. They don't build the spec homes in the way they used to, at least here in the New York, New Jersey area. And from what I read, a lot of other areas. And that's what's helped home real estate is not get as severely hurt as potentially as commercial real estate could.
If the commercial real estate bubble pops, Peter, what is the contagion effect? What other sectors will be affected?
Well, the banks, because they are what people have to understand is the small business owner is the backbone or has been the backbone to the American economy. So while it's important to keep hearing how, Apple and all is doing and all, meanwhile, as you keep seeing small businesses closing or struggling because we hear all the time it's so hard to get labor, it's so hard to get parts or services that you need in order to fulfill your end. These are all issues that play into where all those people are affected by that. So when that guy that can't sell this part, he doesn't go out and dine a lot. So now the restaurant where he would normally go out and dine a lot needs to pull back and doesn't spend as much money buying his food. And the food vendor that they're buying it from, they have to cut back, and it becomes a cycle. And we're in that cycle now. A good part of America is still trying to adjust and restructure. And while they don't like my line that I use in my planning business, less is more, it's really becoming a necessity for more and more people as time goes on.
Why is the middle class struggling, do you think? Is it primarily because interest rates are rising and they haven't had time to pay off their debt before the rates ticked up so quickly?
Well, wages have not kept up for a good portion of the working class as inflation did. Also, quite frankly, we've been living beyond our means. A lot of Americans, we've been able to do that because we've taken on debt, personal debt. You've talked about how much debt has come, and we've taken away from our future. I can't tell you how many people have not yet started even saving for retirement when that age group 10 or 20 years ago was already well on its way because they've been using what would have went towards retirement to live a lifestyle that they've grown accustomed to now. So, and I don't think that's limited to the United States. but it's paramount because I see it day in and day out. And I saw it all the way up to when I dealt with professional athletes every day. Even though they were making large sums of money, they were still living a lifestyle past that large sums of money. So to try to get people to live a lesser, more lifestyle is still a challenge.
All right, well, let's bring it back to the markets here. Now, the S&P is up for its fifth consecutive week last week. Since the lows of the bear market, it's up 26%. So the stock markets have had a good run lately. Now, interestingly, I'm looking at the Commitment of Traders report from the CFTC. This is the biggest accumulation of speculative net short positions on record. Well, this chart goes back to 2016, but so in the last, I would say, 8 years or so, 7 or 8 years, this is the most amount of shorts we've accumulated in the markets, and yet the markets continued to go up. Can you make sense of this, Peter?
Well, if I was very bullish, which I'm not, but I'm also not extremely bearish as some of these shorts are, I would view that as a bullish factor because we could see, and we might have already started to see it, a short squeeze, so to speak. The one concern I would have if I was in the bullish camp, and that is we need to see more stocks participating in the advance. Much of this rebound has been limited to a few sectors and a few key companies. In fact, just a couple of weeks ago, less than a dozen stocks were responsible for 90% of the gain in the S&P. That has to expand. You have to see new highs increasing. You want to see volume higher on the increase, or else it's just a rally in a real steel secular bear market. I've chosen just to stand aside here, but with the asterisk of if you were just 6 or 12 months ago kicking yourself that you felt you had too much stocks, this would be a good time to use such a rally to lighten that. I think there's still reason to believe that, in my view, the best the markets can do is get into a trading range and not see this, these people have been calling for 50% down or, crazy numbers that even in my most bearish moment, I can't envision happening unless something beyond we've even talked about was to occur. And so since Wall Street, and it's hard for people to accept this, but has a built-in bias to be long or talk being long, and you have this ammunition that you just spoke about, which can really help them, those that think that way, there's still the possibility that the market can move, decently higher. But as I said earlier when we spoke, as we get into the fall and politics become more paramount on what's going to be happening, that I think is going to be a challenge and something that will, if it hasn't ended by then, would certainly be a good wall that will come up to stop the market from going higher.
Wait, Wall Street has a long bias? Can you explain that?
Well, do you think if you and I, David, went into any office, we won't mention names, we won't mention any area of the world, and we just got to listen to whether it's retail financial advisors or large institutions, do you think 8 or at least 9 out of 10 are advising that people to be long things, not short things? Bet on better times and markets going up. Because if you don't believe that, you need to know that most retirement plans in the United States, certainly the ones that we get to look in that come into us, are built on equities and mostly just equities going up so the person can reach their goal, whether it's retirement, their kids' colleges, or what have you. So that's the bias. And I like to describe it this way, and it always causes a few emails negative, so why not a few more after all these years? But I've always said you can throw most of the financial advisors, the majority of them, so that's somewhere between 51 and 99%, off the top of the ink by state bill, and they'd all say the same thing going down. Hey, so far, so good. So I've seen the bias firsthand. There's another bias, David. There's a bias that's always gloom and doom. You may even interview a few of those people. They've been telling me for 30, 40 years that silver was going to do this or the market was going to go down to this. And there's an opposite of that. But they're a very small segment or fragment of the overall market versus the people that are always bullish.
Yeah, well, you're not always bullish, nor are you always bearish.
Nor am I always right.
Nor... There's some value in being consistently wrong, which you're not. because then you just do the opposite of whatever that guy does. All right.
Well,
So
they
what is
have
your
a guy like that. He's on national network, but we won't talk about that.
what is so okay? So let's on the segment of markets. Are you long the markets right now yourself? Are you mostly in cash? Are you on the sidelines? What are you doing with your money?
Yeah, I wouldn't have any money in what we call general equities. I still like uranium a lot. I've loved Cameco. I've talked to you many times saying that had to be a core holding if you believe in the uranium story. It's making new highs. I still think it has a way to go. I do think we're finally, and let me be clear with this, David. I would have told you the same thing 3 or 6 months ago. So I would have been wrong now because I would have said it 6 months ago and it didn't happen. But we are seeing finally a true capitulation in the junior resource market. I mean, people not only just emotionally expressing dissatisfaction and done with, but acting in the way that they're selling shares, just puking in them to an illiquid market, and that creates even more. So I've even seen a great tempering from those people who always have been in that market and always been people speaking about juniors. And yet, why that's concerning is if you believe the argument from the bullish equity camp that, my God, things are going to be great and this electrification of the world and power and all the things that are going to come in electrical cars, we're going to need the metals to build those things and support those things. And wherever you look, whether it's in base metals, things like copper, nickel, we have a coming shortage, if not already here. And the lack of money that has gone in on capex for serious uh, expiration has continually to drop and drop. So there's only one or two things at this point. They rang a bell. It's an end of an era, and I didn't hear it. And that means junior resources just go bye bye. Or we finally come to a point, such a discrepancy between metal prices and the underlying explorer that, there has to be a rebound, so to speak. Now, some will use that rebound if and when it comes just to divorce themselves from it because it's been extremely painful. Trust me, my wife has been building a doghouse in the back and we don't have a dog. So I'm a little bit concerned about that, David, because she keeps looking at the portfolio. But in all seriousness, we are seeing really good fundamentals for things like copper, nickel, lithium. I can go on and on, critical metals, and we are not going to be in a position to deliver that to the demand. And these are the type of companies that are going to be called upon. That doesn't mean everything works because failure is the norm in the junior resource market, but it's finally at a point where I'm finally seeing that real capitulation that needed to happen. Does it need to happen in another 3 months? Absolutely. But is there more than 10% or so further down? I don't think so. But the upside now is clearly a lot better than the downside in that market.
So the copper price has fallen, not like by a dramatic amount, but it's down. The lithium has really fallen. Do you think these prices are falling to a point where a lot of these junior miners are going out of business?
Well, I'm not the person that said it, and I can't remember, excuse me, who actually said it. But if a few hundred juniors would just go out of business that are on fumes only and exist morely on paper, or they're what I like to have always called over the years personal retirements for the promoter who does just enough to keep the business going and then gets through the cycle and does it over again. It would be nice if a few of them weren't around. But I can tell you this much. We are going to see a tremendous increase over the next 6 to 12 months in consolidation because survival for some of them is going to be paramount. We're also going to see the majors now. I think we started to see it. And I was surprised that some of them paid almost up to 90% premium of the average trading. Normally that's kept in 30 or 40. But they did it because the juniors were so cheap, it didn't matter that they had to pay another 40%. It was still very cheap. So one of the big things, hopefully in the next 6 to 12 months, you'll have discussions on with people that are experts in those areas of how much mergers and acquisitions have increased. And I think that's coming now. I think we're at that reflection point where that should start basically through the summer here now and work its way through next year.
Let's go back to the gold miners. I'm looking at the GDXJ, the VanEck Junior Gold Miners ETF, and over the last, I would say, since its peak in mid-April, it's been trending down. Again, it hasn't collapsed or anything. It's down about $5. It's trading at $37. It was at 42. So that's more or less followed the price of gold, which has been trailing down a little bit, except the gold miners have a higher beta, so it's moved more. But generally speaking, why is it that the miners follow gold and not the stock market? Because keep in mind that while gold was falling the last month or 2 months, trailing down, I wouldn't say falling, but trailing down, the stock markets continue to grind higher.
Well, mining stocks are going to do what the metals do. They're not going to be rising just because the stock market's going to do. Let me make one point before I talk to you about gold itself. One mistake junior investors make in particular is they root for bad things in the markets. Oh, bad bond market, bad stock market, bad economy. Well, if all those things are happening, people aren't going to go, well, sell my Apple, sell my treasury bond, sell my business, but buy me some junior resource stocks. That's not going to happen. So you don't want to root for real bad things if you're junior. But let me address the gold market. First, since it made its third attempt to break through old highs when it got to about 2060 last, we've been in what's called a bearish wedge, declining wedge in the gold market. I don't have the chart to show you, but it's there. The apex of it comes together at the end of this month. So I fully suspect that we're within 2 weeks of gold making a major move. Now it can break lower from that, even though bearish and bullish wedges do the opposite 80% of the time. The other important factor is we've been in a 10-year, you've heard this before, it's still there, it's only getting larger, cup and handle formation. The longer a technical formation takes, when it eventually breaks one way or another, the bigger the move that's going to be. So all we've done, if you're bullish, is made the potential upside even better by continuing this formation. And until that handle breaks to the downside, one should remain optimist that we're going higher. And it literally, for the first time, and you know this, I've not been ever in the camp of 5,000 gold or 10,000 gold or silver's going to $250 an ounce and all. But finally, the technical charts, if they break out to the upside, can support and give you targets that are much higher than I even had. I've all along felt when we were at 1,600, maybe 24, 2,500 on gold, and that would be it. But I think now it can go even a lot higher than that. Now, I don't want it to go too high too fast, because if you told me in the next month gold was $5,000, I would tell you what's happened in the world. It's probably not a place we want to live anymore. But I do think the upside still remains. The shares and things related to it are as cheap now or cheaper than any other time that I can remember in 40 years. And when you compare that to other things that are still not attractive or certainly not been beaten down in the way that juniors have been, I think there's less risk speculating. And remember, speculating and gambling is both the same thing. I think they offer, and the metals still offer, a place to be, and that's why I choose to be in them and uranium than versus Apple or some other stock. There's been times when I've been in the general equity market, but this for me is not one time that I would want to be.
Okay, I'll just provide you with one perhaps bearish case for gold, and please address this, disagree with it if you like. There's usually historically been an inverse correlation between gold and the real interest rate, which is the nominal rate minus the inflation rate. Now, if you just break these two components down, the nominal rate might stay elevated if you think that the Federal Reserve is not going to pivot anytime soon. Meanwhile, the CPI print has continued to go down. Like the last print headline CPI was 4%. And so if you think that these trends will continue over the next couple of months, which is to say that the nominal rate will stay high, but inflation might come down a little bit more, then you're going to get real interest rates rising, which should be a headwind for gold, would it not?
And it would be, except there's one party that, with a huge asterisk, makes me not worry about that too much. And that is the continuation of central banks accumulating gold, while at the same time openly speaking about the moving away from the dollar, and we're seeing it statistically happening. The central banks are not buying gold for a trade or because they're part of the world's coming to an end group. They're buying gold because they foresee it being used, or at least more diversification from them away from paper money, including the dollar. And the betting against gold versus the dollar is a better indicator to use in my book in 40 years than real interest rates, because I can show you periods of time when what you just stated true and gold went through the roof, and the opposite when it should have went the other way and all. So as long as central banks don't suddenly switch from being large buyers to significant sellers, and suddenly the brick and all that type of stuff disappears, and those countries say, no, we were only kidding, those things are very favorable for gold long term and support my view that it's a place that at least I want to be invested in, and not some crazy, technology or cryptocurrencies or things of that nature. Oops, I said it. I hope that doesn't bring me more emails now, David.
Yeah. No more no more hate mails to Peter Grandich. It's not cool. I had a guest on the other day who had to turn his camera off because he got so many hate mails over the last couple of years because of his views on some other markets. But yeah, that's hopefully stop doing that, guys. But anyway, the dollar. Let's close off on the dollar. So it peaked around 2022 at 114. It's currently at 102. So 1 year, or not quite 1 year, but like 8 month, 10-month decline, steady decline from its peak in October. Now, what's your view on the dollar, the DXY going forward? It's been range bound for a couple months. What's next, do you think?
It's rolling over. It's a slow deterioration. I'm not looking for a big crash or anything, but we just continue to see momentum for countries and groups who want to de-emphasize the dollar and seek alternatives to it. Doesn't mean that it's going to be replaced overnight and it's going to disappear, but there are people that want to have other choices and grew really concerned when our country weaponized it against Russia. They don't want to be a victim of that. I mean, even the fact, one thing I was surprised that the political shows didn't discuss it more, that the president of France asked if he can go join the BRIC meeting just to attend. I mean, that would be it's mind boggling if you think about somebody would have thought about that 10 years ago. And that's because even France and some others recognize the way the United States has been, including how we left them to dry in Afghanistan. They want to have alternatives too. So the dollar to me can only work its way lower, and longer term, that can only be bullish for gold.
Yeah, well, keep in mind, Macron recently visited Xi, so that was not too long ago. Yeah, that's a good point. So the dollar, what about the other central banks around the world? The Bank of Canada just hiked recently. The Bank of Australia is going to hike again, most likely. So the other central banks are a little more hawkish, at least the Western central banks, a little more hawkish than the U.S. Federal Reserve. That would potentially put more pressure on the dollar, would it not?
Yeah, and don't forget, the dollar was a huge overloaded trade not too long ago. The boat was full of dollar bulls, and it's going to take a while for them to come out of that, especially if we keep rolling down. So it's not that suddenly the euro has become extremely attractive or an alternative currency, but just the fact that politically and economically and socially, countries want to be de-emphasized away from dealing with the dollar and possibly dealing with the United States in the manner that they used to deal with. And I'll give you a quick example before we run out of time. Recently, there was a big meeting in Kenya with some local African countries, and they said to themselves, why do we use the dollar to trade among ourselves? Why don't we just use each our currencies? We'll use the dollar when we have to trade with the United States. And I thought that was very foretelling. I see those conversations probably happening all around the world. And again, like I said, the days of the United States being the world dominant country on all sorts of fronts is waning. And we're going to have to adjust according to it, at least if you invest for matters of years anymore. Some people don't. They invest for matters of just hours. But I think if you're still long term, you have to view these things as importance and play a role in how you handle your portfolio going forward.
I'm going to close off on the de-dollarization trend, and I'll give you a personal anecdote because we're looking at stats from a higher level. But if you actually traveling like I've been doing. I'll give you an example. So I came back from the airport after going to the U.S., got in a cab in Canada, Vancouver, where I'm based now. I didn't have any Canadian cash on me. Right, I just got back from the U.S. All I had was U.S. dollars. And so I looked at the guy. I said, "Look, I don't. You can take my credit card, or I can just give you US 20. What would you prefer?" He said, "I'll take the 20." Okay, so Canadian cab drivers are still taking the US dollar. Now the reverse can't be applied. It was a couple of years ago. I was in Central Park, went to the Central Park Zoo, and all I had on me at the time was Canadian dollars. I didn't check my wallet at the time. I gave the cashier a $20 Canadian bill. By accident, he looked at me. He said, "Can you just hold on for a minute?" He went to the back. He showed the bill to his colleagues, and all I heard was laughter. And then he came back and he said, I can't accept this." So all around the world, the U.S. is still recognized as currency, but the reverse can't be applied yet. So this trend that we're observing right now, it hasn't happened yet, right?
It's moving in that direction. And by the time it reaches the cab not taking that dollar,
Yeah.
what'll have happened economically into your portfolio would have been years before that.
Okay. All right. What is the alternative currency? I'm just going to close out with this point. What is the alternative currency if not the U.S. dollar for a global reserve currency?
So I'm not in the camp that just thinks it's going to be a matter of replacing the dollar as a reserve currency. What I suspect is that there's going to be regions where they trade either in a new currency and or commodity package, or they simply trade in their currencies and don't use the dollar as the means. And that we're seeing a lot more. And will there eventually be a replacement of it? Just ask the people that once thought the British pound, which was, Great Britain was the world power before that. So there's a change coming, but I don't think the change is overnight. And I think it's going to be more on alternatives versus replacement.
I'm guessing you think Bitcoin is not an alternative.
Again, you got to bring me up with these emails. I just put out a report today called Bitcon. So now, since you're going to be running this, people who love it can come, read it, and then, send me all the emails again, which is okay because seriously, as long as I keep getting those type of calls, I know we're not at the bottom yet in that market.
Okay, interesting. Well, I think there's always going to be people who are fervently supporters, no matter the price. So where can people read your reports and follow your work, Peter?
Or where they can send the nasty emails to. So it's petergrandich.com for the website. I'm on Twitter, and I also have a YouTube page.
Oh, you have a YouTube page now. Congratulations. We'll put the link down in the description below. So check out.
Can I say one more thing?
Yeah, please.
Keep this in this recording. I've watched you come from just a few years ago in a small apartment in Montreal, never really doing this before, to really becoming first race and first class, David. And whether you have me best not to be on again, you know that. I think you know that for me and all. Keep up the good work, but just remember two things. Always remember how to spell the word humble. And remember what Mark Twain said. If you always tell the truth, you never have to remember what you said. And keep up the great work. You're doing a really good job. I'm watching your show to hear from certain people.
Thank you. I really appreciate that. Yeah, I've worked with you for many years, and I've learned a lot just speaking with you. So I'm very honored to always host you. So I'm looking forward to hosting you again very soon on another market update. So thank you for being here, and thank you to the viewers for watching. Well, check out Peter's work. Put the links down in the description, and thank you for watching. Don't forget to subscribe. We'll see you next time.